Good afternoon, everyone. My name is Bruce Lynn. I'm one of the managing partners of the Financial Executives Consulting Group. We're going to start the main body of our presentation in another minute or so. We've got some people logging on, so I just want to give them a chance to get in and get settled, and then we'll start. For those of you who are on the line, you are on mute-only mode, which means that you can hear me, but I cannot hear you. We're going to do a formal presentation, and after that, or even during the presentation, if you'd like to type in questions, use the chat box, the question box on the lower right-hand side of your screen. Type in some questions. I'll be reading them out after the main body of the presentation is over. If there are questions that you don't want me to read out, you can certainly send me an email. And if we don't get to any of the questions online, we'll certainly get to them offline. So either myself or Brian will get back to you. So with that, I am going to go away for about another minute, and then we'll start very shortly. Good afternoon, everyone. My name is Bruce Lynn. I'm one of the managing partners of the Financial Executives Consulting Group. We're going to start the main body of our presentation in just another minute. A few administrative announcements. You are in mute-only mode, which means that you can hear me, but I cannot hear you. If you have questions during the presentation, please type them into the question box on the lower right-hand side of your screen, and we'll get to them after the presentation is over. If there are questions you don't want me to read out loud, or again, if we have questions left over, we'll get to them offline. And again, you can send me an email for those kinds of questions, and either myself or Brian will get right to them. So with that, one last thing. Yes, you will get a PDF version of the presentation. It is being recorded, so you'll also have access to the recording. Okay, with that out of the way, let's get started. So Brian, why don't you start the presentation?
All right. Well, thank you very much for that, Bruce. My name is Brian Erlene with ESKER. And Bruce, is kind of interesting, as we were talking a little bit earlier. We started having conversations about this topic back in December. And I think probably even to start off everything here before we get too far into it is that we almost should address, or just to bring up, that the world is quite different today than it was when we started talking in December and January. And hopefully this topic today is going to be even more relevant to the viewers that we have here, because I think working capital and how to optimize that is very important. It was important a few months ago, and I think it's even more so now. So
I think the idea of accounts payable as a function of the supply chain is certainly an area that more people are pondering. What's the right solution for them?
Yes, couldn't agree more. So with that being said, let's kick it off. And like Bruce said, I'm Brian Erlene with ESKER, and I've been with ESKER for 10 years now. And I'll start off first with who is ESKER, so at least you guys people know kind of where I come and where my background is. ESKER, we are a software company, document automation software, and everything we do, all 700 plus of our global employees, are focused around the basically order to cash and procure to pay cycle. So again, this shows a little bit of the diagram with your company kind of sitting in the middle. You have invoices that come in from accounts payable. If you look on the right-hand side, you have your customers, then obviously you invoice them in your accounts receivable side. Prior to this, we did part one, which was an hour-long focus just on accounts receivable. Today, we're going to focus on the accounts payable side of the house and how those kind of work together to optimize your working capital. I also like the slide for a couple of reasons. One, it kind of shows a little bit of a loop that goes, as you send out invoices both to your customers and then invoices come in from your vendors, it really ties the relationship between your customers and vendors. This figure 8 type of circle here, it's important that you know that your accounts payable is somebody else's accounts receivable, and somebody else's accounts receivable is your AP. So it really shows that if you have a strategy, you can work together and optimize not only your own working capital, but also in a way that also supports and helps promote you with your vendors and customers. This also shows a lot of the smaller areas within accounts payable as well too. So as we're going to dig in today and talk a little bit about some of the companies that have gone through a digital transformation, we'll talk about what that is here and some of the results those companies can get, that you realize that there's a lot more to accounts payable than just cutting a check and balancing the books once a month. So with that, and I probably could even start with there by when you say digital transformation, in accounts payable, what that oftentimes means is companies that have actually, implemented a solution specifically designed for their AP. Many companies have gone from paper-based AP, where invoices would come in via the mail, you'd open them up and, sneaker them through the office, put it in a filing cabinet after it's done. That was quite some time ago. Nowadays, most people get their invoices electronically. However, they might be working with like a shared inbox where you're using Outlook or a tool that's not specifically designed for AP or for an AP processing queue. And that's where we kind of talk about what's the difference between really electronic and a true digital transformation. And the results we'll show you later are what you can expect if you do go through a digital transformation or how companies are operating today. And to tie this all back to working capital, again, as we just showed you how you have accounts receivable and accounts payable, and really the definition we kind of use for working capital today is your current assets, such as cash, or in many cases, your access to cash, plus your AR minus your liabilities like AP. And again, hopefully this will resonate with a lot of the viewers today because working capital really has become pretty important. And the biggest change that we've seen recently, working capital has always been important, but now access to the information in a more timely manner is the really kind of the biggest driver that I've seen recently. As we've seen, the world can change, not just a matter of weeks and months, but in days. Companies need to know where their working capital is, not just on a month-end basis or after you've kind of done the books every 30 days. You need to know more real time, or the difference between, as Bruce would say, the difference between accounting time and market time. You need to know on almost a daily basis or near real time what your liabilities are, what your incoming, your AR is, what that forecast looks like, so you know where your current working capital or where you currently sit. And of course, what we're talking about with both of these is really the cash conversion cycle. And we shared a little bit about the AR accounts receivable last time. Today we're going to focus on accounts payable, but both these are two sides to the same coin in that every company has a cash conversion cycle. So if you think about this diagram here, it's your cash conversion cycle. How fast you can get this wheel to spin is how fast you can turn over your cash and really can show some improved profitability. So we'll again to talk about some of the best practices there. So again, think of this wheel, think of it spinning. Obviously, we talked about accounts receivable. We'll recap that briefly. But today we'll focus on here and how both of these are tied together to improve your cash conversion cycle and improve working capital. So what is a good what is a good level for kind of the cash conversion cycle? Where do most companies sit? The best-in-class companies, they can turn over or flip their entire cash conversion cycle in 30 days. And average companies are going to be closer to 45. And even that is a pretty big difference. If you're at 30 days and go up to 45, that's a 50% increase. And then, of course, we're talking about the laggards or some of the worst performance. That's 2.5, almost 3 times as much as your best-in-class. Now, every company in every industry, their cash conversion cycle is going to be a little bit different. Whether it's a product or service, everyone has some sort of cash conversion cycle. And yours will vary a little bit depending on the product that you make or complexity and other things that are involved with it. However, your competition is going to have the same challenges that you have in that way. So really, when you look at where you guys sit within the cash conversion cycle, it's important to measure yourself against peers. And that also can give you an extremely competitive advantage. Again, there's a couple of ways that you can look at this. One, you can think of it as that every company, time is a great equalizer amongst all businesses. We all have 7 days a week, 365 days a year. What we can do with that time really could make and determine how profitable we are. Or you could say if somebody is twice as fast at their cash conversion cycle and they have the same product or service that you guys offer, they can cut their margins. They can sell their product for less, having less margins, but yet still being more profitable. So again, your cash conversion cycle is a pretty important when it talks about strategic advantage within a company.
I'd like to add there that if you are a small company and you are at the high end of your borrowing utilization, or quite frankly, if you don't have any access to extra borrowings, then price alone, interest expense, then price alone is really not the metric that you're looking for. Again, if you don't have cash, the price is infinite. So if you have 45 days as a cash conversion cycle versus 80, that person out there at the 80-day level is twice as bad or is going to need twice as much access, everything else being equal, to a force that they can't control, namely the capital markets or your bank. And in today's world, as we've seen, the banks are not thrilled with just lending money to companies that may or may not be able to survive the current economic environment.
Yes, excellent point, Bruce. There's, again, a lot of different ways of how you can kind of take this information and apply it to your own situation, but certainly that's a great point. So, and which leads kind of to the next area we're talking about is the kind of where is the cash tied up? Or if you're, like myself, maybe a little bit more of an optimist, what can you do with that extra cash is another way to kind of look at that. And really a lot of key areas. Obviously, if you have, if you are more profitable, if you have access to cash, if you are generating revenue faster, you can use that money towards R&D. Raw goods and materials, that's one we'll touch base on a little bit because today we're going to focus on the accounts payable side. Frequently we're seeing with customers today that have a solution like Esker, their vendors might be coming to them and say, well, typically you buy, 100 units of our product per month. Well, if you would be willing to take on 120 units, we'll give you a price break. Again, that's a great idea. If you can take advantage of those situations and maybe some of those discounts that are involved with that, one, you have to have space, obviously, in your warehouse for that. But two, you need to know where your working capital sits. And if you can take advantage of that, or like it was kind of alluded to, if that would be some borrowing from that, can you access that cash for those? So again, a lot of ways that you can apply some of that more productive cash to goods and raw materials. Obviously, sales and marketing, manufacturing and distribution, obviously getting your supply chain improved will be greatly beneficial. Payroll and administration is a very interesting one because, again, a lot of companies that, looking at less than a month ago were, quickly wondering, do we have the cash on hand to make payrolls? What if our customers start paying us late? How is that going to affect us? And again, having a tighter grasp on your working capital certainly comes into play there. And like I said, Bruce said earlier, investing in borrowing. If you are, whether it's a line of credit or any other borrowing, there is going to be a cost for that. Or on the flip side, if you have some additional cash, can you make some strategic investments? And anytime they have a crisis, there are companies that as we pull out of this, they are able to make smart investments and yield great returns on that. So just to recap kind of what we did talk about last time, we're talking about accounts receivable. And again, there's a lot of components to accounts receivable, but one area, basically automate and optimize the tasks that should be automated. Have your to-do list where you have automatic payment reminders going out. Make it very easy for your collections or your AR teams to, get their job done where, again, the scheduled tasks that are automated, it pops up on their to-do list. It's easy for them to log calls and activity. Make it easy for your customers to be able to pay. A simple portal where they can come in and either make a payment, schedule a payment, and also too, if you have tasks or assigned tasks to different collectors, but also work with your customers. You may have some customers that are having a tough time based on the industry that they're in. They may need to get set up on some sort of payment plan. Well, again, have a solution or have a tool that can allow you to easily do that so that you can kind of get the most out of your customers, as well as maintaining the relationship that you have with them. You still want to maintain your customers. Obviously, you want to get paid what you can, but again, if their industries are completely turned upside down, which some are, then again, the payment plan might be the best strategic way to go. In short, they have a solution or automate a solution that can basically execute the task, send out the automatic payment reminders, allow your customers to pay earlier. Again, all of these solutions, all of these benefits right here will also greatly reduce your DSO or days sales outstanding. Obviously, bringing more cash in the door will then allow you to do more things strategically with that money, like we talked about before. Again, this is an automated solution that doesn't get distracted, can not only works 24/7, 365, but as a cloud-based solution, it works from home, so you don't have to worry about the business continuity. It actually even lets your employees work from home much more efficiently as well. So that was the kind of recap of the AR. So now if we flip our kind of thinking to accounts payable side, we'll look at some of the benefits of a cloud-based solution for AP. And many of these benefits are still the same. Obviously, efficiency and cost reduction. If it's flexible, where you can work from home, you have a mobile app that allows you to do it. That's something that's a little bit newer to the AP world. Most companies that I've worked with prior to this, their finance department was always in the office. They needed to be kind of connected to their ERP system or their enterprise resource planning, their main accounting system that controlled all their finances. So oftentimes that meant they had to be physically located in their building, kind of behind their firewall, so they could operate that way. It's changing a little bit. You have finance departments that are now working remote. You've always had managers that needed to have approval, and that was kind of where the mobile app mostly came into play prior to this, is where a manager could simply, that was traveling for work, they might be able to say, oh, yep, I do have that invoice that I need to approve, quickly go in there and do that. Now you may have more people in finance that are working remote, which brings up the next bullet. How do you have data security? If you have our people working remote, do they need to be able to connect to their ERP or main accounting system? How do you put controls over that so that you can have access to who accesses everything that's there? Is the solution scalable? Companies may be scaling up or down. There may be scaling through acquisition. So that's kind of another interesting thing we're talking about in a little bit here. What if you have multiple ERP systems or larger companies that would acquire new companies? Can you tie their AP together so you still have a snapshot of the liabilities of accounts payable, again, so you know the working capital between both their companies. Lastly, visibility control, and I'll probably say that this is the biggest change or the biggest point of emphasis on all of these. It will be on visibility. Like we talked about at the opening up, finance needs to see, if you're a CFO, treasury, any executive in the finance department, you need to have visibility to everything, and again, in real time, not just, again, whenever at the end of the month or end of the year, end of the quarter, when you kind of true up the books. You need to know what's going on, at any point. And we've seen a lot of companies that are kind of scrambling to do this. They might be running multiple different reports, trying to mash them together. And again, like I said before, it isn't really effective or really isn't sustainable. So with the benefits, one of the keys or ESKER philosophy is that any solution, any kind of a front-end accounts payable solution that will take the invoices in, will be able to, obviously extract all the data and do all that information, it needs to be integrated with your ERP. Your ERP or accounting system still needs to be your master system of record. You've spent a lot of money, you invested a lot in there, but an ERP is very different than other solutions like an ESKER, where you can have a communication back and forth with your suppliers. Your ERP is not a CRM. It's not a customer relationship management. It wasn't built and designed for that. It's very good at what it does, but again, that should be your controlling your finances, but it does not always do a great job of communicating and getting information from your vendors. So what does an integration look, and how would this fit? And I have a brief diagram just to show an overview of people, so hopefully this conceptually you'll kind of get the idea. Your suppliers are all over here. They'll send in invoices in any sorts of manner. Hopefully they send them via email, but you may get some postal mail or even by fax. They'll go to the ESKER system, but prior to that, as you see on the bottom there, the ESKER system has the master data that is sent out from the ERP, such as a vendor master with your vendor number. typically your suppliers are never going to put your vendor number on their invoice because they don't know what that number is. That number resides in your ERP system. However, if that information is sent over, you have the AI and machine learning intelligence within the ESKER'S system is going to be able to read that document and not only extract the data, but also populate data that isn't even on there, such as that vendor number. And there's workflow involved as well. If it's a non-PO invoice, it typically might need to be approved, although we've seen some customers that actually approve PO invoices if they're over a certain dollar amount. After that invoice has been approved, then it would get sent to the ERP, where the ERP would then post the invoice for payment and then send an acknowledgement back to the systems where you have records of everything that was transaction there. And then also the payment release and the payment release information would go back into ESKER. And the reason why we have the payment information in there is that way you can have that a final resting place of everything in the ESKER system. Obviously, the extracted data was passed to the ERP, so you have records there, but you can use the ESKER system for external audits where you could have somebody come in as an auditor on an annual basis. Again, they wouldn't even need to come on premise because as a cloud-based solution, they could log on with their auditor credentials that would allow them to see information but not change it. And of course, you can control what they see, but they could run a full audit of everything or see all the invoices they would need. So that is a little bit of the high level of integration. And as I said before, you can have multiple ERP systems that are connected. So whether it's, again, your SAP, Oracle, Dynamics, NetSuite, or some of the smaller ERPs, your, Epicors, INVOICES, Syspros, Sage. We have over 70 different ERPs that we've connected with. And that's ERP types, not even versions. If you're talking versions, then it's probably well in the hundreds. And we did also receive our SAP certification for S/4HANA if anyone's running their SAP in the cloud. So again, that is a philosophy that's the ESKER philosophy that your front-end AP should be integrated with your ERP system. But again, what are the drivers that customers are looking for today? And like I said before, the biggest thing is visibility. You have to see what is going on and where the cash is and what payments need to be made. And the visibility has to be real time now. Again, it's no longer available to do it every 30 days to know where you're at. And how you present that information. You want to be able to present it in dashboards, analytics, reports, so you can see and make use of that information as well. And a study that was done by actually ePayables in 2018 shows that 56% of all the enterprises believe that they want stronger, deeper, more analytics and reporting, and it's a necessity for their AP. That almost feels dated now, even though it's probably only a year and a half old. But I would say that if they did that study again, you would have a tremendous increase in that. I don't know anybody today that says they don't want more information or don't want more visibility into their APs in times like this. And then how is that information displayed? Again, you can have the dashboards which quickly show you everything from, and then quickly show you everything specific that you would want to see. So you'd have different profiles for different people within the companies or different levels. Somebody in the accounts payable department, they may need to log into the system, and I want to see, well, how many invoices do I need to process? What are some exceptions that are out there? Managers might want to see, again, from a higher level, is there vendors that are invoices that are getting late? That they need to pay before they could have a penalty? Are there potential early payment discounts? Very interesting topic that we'll touch on a little bit later, but again, that's something that they can manage from their dashboard. And the CFO, again, they may want to see between different companies if there's multiple ERPs, and even only if it's one ERP, they still want to see everything that's going on or have slightly different information to know where they're at, and again, have an insight into their AP and working capital. So besides visibility, what are some matrix? Obviously you can see where you have a tremendous amount of additional visibility. You'll never have this kind of visibility if you're using something like an Excel, an Outlook to manage it, or Excel files. You can't pull this information. And if it's paper-based, obviously, then you're really hurting. There's no way you'd have this type of information available on a moment's notice. But besides visibility, what are some other areas of companies that have gone through that digital transformation? What are some of the results that they can see compared to everyone else? And one thing we'll say here today is that there is quite a bit of difference between the cost to process a single invoice. Again, when I talked to Gartner, They recently said that if we're talking about a accounts payable digital transformation, they only assume that there's probably about 14% of the companies, worldwide that have really gone through this and have kind of a best-in-class AP automation. So that means there's a lot of room for improvement. That also means that when you're talking about the cost of processing invoices, there's a lot of companies that are in that left-hand or that 1260 column versus the ones that are closer to $2. So certainly there's a lot of room for improvement there. And again, this was taken from 2019, so a fairly recent study. If you are a very paper-intensive type of company in processing of invoices, which I have seen even very recently, your numbers are probably going to be higher than that, probably even higher than the 1260 that's there. A lot of what they're assuming with Ardent Partners in their study here is that you have some sort of form of electronic management of this. Again, if it's paper-based and filing cabinets, you lack complete visibility. You can kind of do a Google search for the cost to process an invoice, and I've seen numbers that are 2 and 3 times as high as that. But again, just to give you an idea of where some of the best-in-class companies are and where some of the companies that and kind of where the rest of everyone else is at. So besides cost, there also is, besides cost, I should say, there also is the time to process an invoice. And obviously they go kind of hand in hand. You would assume that a more automated solution would be more efficient. The best-in-class companies, or that have gone through the digital transformation, there's as low as 2.9 days. Higher companies, you're looking at well over 10 days. And some of you guys may be saying now, well, if my payables are net 30, what's the difference? What's the advantage of being under 3 days, or what if it's it takes me a week and a half to do it? Who cares? And a lot of reasons for that. One, obviously, we just kind of alluded to the costs that are involved with that. So if you have a more automated solution, you can do the automated 3-way match, and you have the and then have stuff flow directly into your ERP system. But there also is a possibility of early payment discounts like we talked about before. And again, this is a very interesting time for that, because historically we've had some companies that have really been able to take quite a bit of advantage of that. And by early payment discounts, you might be, if your terms are net 30, you might have a company that says, well, I'll give you, 2% or 4% off if you pay us at net 15. There are a lot of companies that are looking to get paid faster. Again, remember, your AP is their AR. So these, even prior to all of this, kind of the COVID and the crisis we're in today, even prior to this, a lot of companies would still want to get paid faster and be willing to offer significant early payment discounts, maybe up to 6 or 8% more. But some of those higher percentage of discounts, they want to pay in a pretty quick manner. They might be talking in net 5. Again, you can't take advantage of that if it takes you 10 days to process an invoice. You just physically can't do it, or you'll frequently miss it. If they have your high level of an automation, you can flag those, you can track those, and you can make sure those get paid. Now, I'm not saying everyone needs to start doing this. However, there are a lot of vendors that are looking to take advantage of that. So it could be strategic for you to say, okay, if they'll pay a certain amount, if it's vendors that you spend a lot of money with, if it is helping them shore up their books and making a better relationship with your vendor and saving a lot of money, especially if you've already automated your accounts receivable, so you have more cash coming in or have reduced your DSO, then you can strategically take advantage of that. And that's ways that you can, again, that's the difference of, again, a truly digital transformation solution versus more just kind of being electronic. The other matrix that is good to measure is how many of your invoices are linked to a PO. Now, you'll never be at 100% because a lot of invoices might be for, utilities, a phone bill, lease, etc. And those invoices typically you do not create a purchase order for. However, there is an advantage of that. It can flow through much faster. You have more controls in place. So you should strive to have as many of your invoices that can come through as possible on a PO. With our ESKER AP solution, we are agnostic. A vast majority of our customers today already have a purchase order system that's tied to their ERP. In a manufacturing setting, a lot of companies use that purchase order for their kind of raw material or direct spend. They may have some indirect, they might have a separate purchase order for indirect. We've seen a lot of different things out there. Again, if you have multiple ERPs, you may have multiple purchase order systems. With our philosophy at ESKER, we would obviously integrate with all of those. If you do not have a PO system, obviously you would be at 0 here, but we do have a module that you can use for that. It's a nice purchase order system. And that is a best practice to try and strive for a high level of POs with your invoices that come in. And you tend to have less exceptions with that as well. Also, too, if you can clean up some of these exceptions and manage them, that's a big difference. Because if you talk to anybody in accounts payable and where they spend a bulk of their time, a lot of it is managing exceptions. And you'll always have some. Even the best in class still have 10%. And that may not be by any fault of your own. You may have your vendor that, if you ordered 100 units, they might send you 75. Maybe they didn't have 100 in stock, but they still sent you 75, and they'll send it later. Okay, so that invoice comes in, it doesn't match your goods receipt. It's flagged in our system, but now you can then communicate with your vendor and say, yep, I received, have your invoice here, received your goods receipt. We have we only received 75, so then what is the next step that you'll take? Well, it depends on kind of your practices and your relationship with your vendor. Maybe it's to make a partial payment for that 75, maybe it's to hold off on payment until you receive all of it. But again, those are exceptions that you can easily manage if you have a better communication tool between you and your suppliers. Also, again, because the exceptions are very time consuming, even a 50% or over 50% drop would save a ton of time and effort from your AP department. And we've seen our solutions really save a lot of time and effort. We've seen companies that have doubled, that have grown through acquisition where they've doubled their invoices without adding a single person to their AP headcount. And then, as we talked about before, early payment discounts. And again, this is kind of a very interesting time for this because, like I said, a lot of companies may be hesitant to try and pay people earlier because they want to make sure they shore up their kind of cash on hand and working capital. However, a lot of their suppliers might be very eager to take advantage of this. So again, if you can think of this or what ways that you can be strategic and where it makes sense, certainly there's a lot that can be had from that. Like we talked about before, if you have a high level of automation, you can take advantage of that. Capture almost up to 75% of the early payment discounts available. And there's a lot that are available. If you are a very lower level, it's very hard to capture, even a fraction of that, or you're only at 18%. I have seen some companies this was a priority of theirs, so they were capturing a vast majority of the early payment discounts. They weren't automated, so they had to throw, pretty much bodies at the problem. So that's, their AP headcount was probably twice what it needed to be. And again, they're able to justify it because the early payment discounts paid for everything. But again, it's not necessarily the best way to go, or it might be difficult today to try onboard more people in AP and have them jump on just to, capture those and process those invoices in a timely manner.
Brian, I would just add here that people look at their supply chain and they're not getting early payment discounts, and you can, how do I say this, afford to or wish to. I think it's time to really look at the whole strategy, your disbursement strategy, and recognize that vendors are really key, and that if you pay promptly, would they give you discounts? So you obviously want to capture 75% of the discounts that are offered, but maybe you're not being offered enough because in the past you said, well, I'm just going to pay everybody in 60 days because that's better for me. So that's a strategy difference. Of course, is the strategy working? Yes, you need something to figure out whether that strategy is working. So I think this is, again, where Brian's going.
Yes, you're absolutely right, Bruce. This gives you the visibility to see that strategy and then put that into action, and then obviously make adjustments as you go. Everything we're talking about here today with all these things also gets you, really to do more with less. Manage your cash, manage your accounts payable, see what's going on. You can see the productivity of your AP team. You can see what vendors are giving you the most troublesome invoices, and then you can make adjustments with them. You can see all of your early payment discounts that you missed. You can see what vendors are giving you the exceptions, like I said, if they're having problems with their shipping. So again, all of these solutions give you the visibility into that. And there's other things to consider too, as well as what would give some automation. And I know, Bruce, you and I talked about before. Foreign currency is a big area. As we talked about, in the business world can change, currencies can change quickly. If you're getting products and goods from other countries, are you just, do you have a strategy about when you do the exchange rate, or are you just buying currency whenever? And, if it goes up or down within that 30 days, just eating the cost of that. Would your treasury want to make some hedges on that, or are there some things that you can do to maybe mitigate some risk with that? Something to consider, but if you don't have the visibility of what's going on, it makes it very challenging to do that. And as we talked at the beginning here, not knowing where your AP is, not knowing where your finances are, limits your ability to kind of manage your working capital. And also too, a quote that I've seen before, it can be very expensive to miss opportunities. And a lot of times there may be hesitation for any type of investment because of everything that's going on and all the uncertainty, but also the uncertainty within your kind of internal organization of where your cash sits, what your liabilities are. But we've all can think back historically, there's all been, every one of us probably has a situation where there are investments that say, boy, I was really unsure at the time, but now looking back, wow, I really should have pulled the trigger there, really should have made that investment. And again, having the knowledge gives you the ability, or gives you a little bit more courage it might make to make some of those investments. And a couple of things that we talked about, Bruce, here too, is supplier relationships. You're absolutely right that you don't want to just probably throw out there to all of your suppliers, well, I'm going to pay you guys at all at net 60 or 120 or whatever number you come up with, because the longer the better for me. It's important that you have a good relationship with your suppliers. If the supply chain is disrupted, you want your suppliers to deliver products to you first. That may be critical for you keeping your lights on. You don't want your suppliers to go out of business if everyone stops paying them at net 60 and they can only make it 50 days. So supplier relationships are key. And what we talked about is a payment disbursement strategy. A payment disbursement strategy that will show you that all of your suppliers, you may have a different relationship with them. Some, hey, they're great at paying at at net 30, that's what they want, that's where we're set. You may want to pay via ACH because that's typically a low-cost way to do it. Now, so your suppliers, well, that you have to have their bank information on file in order to do that. Some may not want that, so they may want another form of payment, which a check, which is not ideal because there's a lot of cost with that and it's slow. You could use a V card. A virtual card is basically a one-time credit card where you send it to them, then they take the payment, but they do have to pay the processing fee for that. Some suppliers might be okay with that. Your FedEx and other bigger suppliers might say, hey, pay us whatever you can, doesn't matter, we'll take it. Okay, great, because a lot of those V card partners will give you a little bit of a cash rebate for that. So all of your suppliers you can manage differently, just like all of your customers. You don't necessarily treat them all the same, you manage them all uniquely. Your suppliers you can treat uniquely as well. You can come up with a strategy where you can say, okay, supplier A, they really want the early payment discount, so maybe that's one that I'm going to maybe pay in net 5 or 10 and capture the early payment discount. Supplier B might be paid at net 30 via V card, C and D could be ACH. If E wants to get paid by check, well, maybe then you say, well, we do our check runs at this date, so we're going to pay you at net 45 if you want a check, and they're okay with that, and then you get to, again, keep more money in your treasury a little bit longer. So a payment distribution plan is important, but you also have to have the front end AP automation to be able to roll out this plan and adhere to it. And also, you really need to manage that. Again, all of these suppliers, how do you manage this data? If you're not, your CRM typically, again, your ERP is not a CRM. It does not have any information about, communications, how they want to get paid. It's very challenging to manage all of this. And if you're using Post-it notes and everything else, how do you trust all that information that you have? How do you know what's right? Well, there's a lot of inefficiencies, a lot of cost, and you could actually risk or miss payments or have some compliance issues as well. One area that you can really help with that is by having your suppliers, having them a vendor portal, where again, your vendor portal can come in, they can see the invoices that they have, they can see what's processed, they can see payment information that was made, they can actually post payments in here as well. It really improves the relationship between you and your vendors. It makes them self-sufficient, which a lot of people would prefer today anyways. And everything's there in one place. You also can even have a chat session between between your vendors and your customers if you'd like. Again, they have the view where they can see what they want or see the information that you provide for them. Instead of saying, calling you up and, hey, did you get my invoice? Did you get my invoice? When's my payment? They can see everything's what's there. Oh, and if there is some exception, oh wait, the price was off, the quantity was off, this is a different product number than we ordered. You have that simple chat, and then of course everything is recorded and tracked. So that is key, that you have all this information tracked in the system. And really just, again, like I said, it improves the relationship between you and your vendors. All right. So early payment discounts, like we said, there's a huge difference between being electronic and a digital transformation. And one of the customers that we had that have taken advantage of this was a customer called Partstown. And like many customers today, they were using an inbox for all of their invoices that would come in. And they do OEM original parts, for appliances. And they would get their parts, and they would typically not want to pay for, express shipping because of the expense. So as their vendors would ship them the parts, they would email them the invoice. The email would go to the invoice, and then about 7 to 10 days later, they would get the parts, and then they would basically process or pay that invoice. And this probably sounds a pretty typical process. Some of their vendors, though, would pay an early payment discount, so they would track them and kind of flag them. The challenge they had is they had 4 AP people working out of one inbox, and they were getting 400 invoices a day. Well, if you get an invoice and don't pay it for 10 days, it sits there. So now all of a sudden, instead of 400 invoices, you have 4,000 emails in that inbox. That's before you even start processing them out of there. Well, how do you manage that? That's a challenge. How do you flag which ones will pay? How do you make sure payments aren't late? How do you manage the exceptions? Again, how do you work with your vendors and your suppliers? A tremendous amount of challenge. Again, they were all electronic. They had a pretty tight process, and they were able to capture actually a decent amount of early payment discount. After a solution like ESKER'S, they now are able to do 5 times what they were able to do before. So again, a 5x improvement of their early payment discounts that for them not only paid for their ESKER AP solution, their AP manager was telling me he was able to pay for his whole department. He actually turned their AP into a profitable revenue generating department because of all these discounts that they were getting from their suppliers. Again, money that had never even left their treasury, so it was great to keep more cash on hand. Or there wasn't a cost to recapitalize that. I'm sorry, not to keep cash in hand, but to recapitalize that money that came in. Likewise, too, they had an accounts receivable automation, so they would get paid from their customers faster and reduce their DSO. So having those two things together really benefited quite a bit from that. Again, not saying that necessarily payment discount strategy or payment distribution strategy needs to be something that you consider. However, it should be an option for you guys. You'd be surprised at how many vendors will be willing to do this. So I covered a lot of things. If you're interested in learning more, here's my contact information. Of course, you can always go to ESKER, ESKER.com, or hit me up on LinkedIn too if you'd like, as well as Bruce too. Here's his information as well, and all of some of the great services that those guys provide at FECG. So that is what I have, Bruce, and I wanted to make sure I left enough time for some questions. I know last time we had some great questions, so hopefully in the next 15 minutes we can answer any and all of those and help any of the people that are on the line learn a little bit more.
All right, well, Brian, thank you very much. And now would be the time for you to ask any of the questions that were raised during Brian's presentation. So let me give you a minute or so to type in the questions, and we'll take them on a first come, first served basis. All right, here's a question. Your portal, can you explain a little bit about how that works and how the other side looks into my AP, or do they just see an extract?
Yes, so the portal is specific per vendor. So you don't have to have it for everybody. You can just pick and choose what vendors you would like to invite to it. So you'd send them in via email. They would log on to with their credentials, and that would authenticate that the vendor would only see their invoices. So again, it doesn't show everything into your AP. It doesn't look inside your ERP system. It basically just says, hey, yep, Esker got, your Esker received your invoice or received all 10 of your invoices. Here's what we got. Here's what they, you can add up dollar amounts. You can do anything, all the information from that document you can make available. And then it will show kind of the status. So, you can say, well, it's in process. We're in the current of processing this. So at least they know where it's at and kind of have that warm fuzzy. Also, though, too, then you can say if you have your payment information that you send out, you could put that back into the Esker solution like I showed in the one integration diagram. You can also have that there. So yes, this was paid via, these were paid via ACH. It was paid, on this date, or this was paid via this check. Here's a check number. It was mailed on this date. But basically, if you have vendors that are calling and asking, hey, did you get my invoice? When am I going to get my payment? This is perfect for them. You can give it to them. There you go. You can find you can only see your information, but you can look into this and you don't have to give me a call. Or if there are questions or exceptions, you can use the chat function and other stuff to communicate with them. But it really makes it more self-sufficient.
Okay, thank you. Another question on the portal. When someone bills a vendor, can they send that bill through your portal?
Yes, we have partners that would do the payments. We don't do the payments through our portal. And that's one of the differences. If you look into this, there's sometimes a divide between technology companies. You'd think that many would be on both sides of the AP coin, such as the invoicing and the payment. But a lot of it is based on the roots of that technology company. Now, our roots are very much in the document automation company. That's what we look to automate. We're not as much as the payment processing type of technology company. So in that regard, to answer the question, no, we can't pay through the portal. But again, our partners can pass us information that do make the payments. So potentially you could put some links or something of that nature where you could direct them to where they could see that payment information.
Okay. Here's another question. Does your system sit on top of an ERP system? How does the information flow between your system and, let's say, my ERP system?
Yep. The more popular term is we bolt onto their ERP system. So yes, we are not embedded inside of their ERP. We are a cloud solution that would connect to them. But yes, again, your integration is integrated with their solution or bolted onto their ERP system. I guess you could say that is sitting on top if you want. But it connects to it and then it integrates to it. But it is not necessarily embedded in your ERP.
Okay. Does Esker interface with the company's ERP system and provide a three-way match between a PO receipt?
Sorry, Bruce. Yes, absolutely. That's again, I covered this very quickly. I probably could have spent a little bit more time on that. I apologize. But yes, you can have a three-way match. And for typically what you're seeing is the invoice will come in. The goods receipt, if it's not there, you may take that invoice and the AP person would just put it in a queue. This is waiting for goods receipt. So if that invoice comes in and the goods receipt is already there and the PO matches, the system can automatically do a three-way match automatically. So that is without even any human intervention. If you want, and that's by a vendor basis, you can select that. Even if you're waiting for the goods receipt, if you put it in a queue, once those goods receipts arrive, that comes into your ERP, that gets updated to Esker, and then we can even look through that queue and take stuff out of there and process it automatically. So you can have lights out or touchless processing with the three-way match.
Does Esker provide any kind of accounting entries to an ERP system?
Yes, you can. You can manually enter in an invoice right from there. Some people call that a check request. So you don't have a physical invoice, but yet you'd want to basically enter something into the ERP for payment, and you can do that as well.
Does Esker have the capability to handle escheatments?
I'm sorry, what was that last?
Escheatments. These are where you have an outstanding AP for years and years and years, and you have to deal with either the state or local government.
Oh, that's a good question. I know we do the accrual reports where you accrue stuff. I don't know if I referred to or have had a lot of our customers refer to it as achievements, so I'm not as familiar with that term. I would imagine though, if it's like accruals, we would be able to account for those, but I would have to get back to you.
Okay. Here's a question about cost. How do you price out your services? Is it a one-time or a subscription or some other form of cost?
Yep. Again, it's a great question. There's an implementation for the setup and integration, and then there's an ongoing subscription as well.
Okay. Can a vendor submit their invoice directly through ESKER and create an electronic invoice?
Yes, they can submit it through the portal. They can submit the invoice, and then you have actually even so they could even do an attachment, or they could fill out some information, and then you have control of what fields are required. So like invoice number, etc. So then again, the system automatically knows and has that information queued up and ready to go. So yes, they can.
All right. Does ESKER help implement a validated receipts processing?
Oh, if it's a goods receipt, yes, we typically have the goods receipts come to us from some other form. So whether that is through the ERP system or warehouse management system, typically they can send that to us. It can be manually loaded as well, or if we have to make some tweaks on our side to be able to take a specific format, we've done that as well. But we don't have a goods receipt module ourselves, but we've worked with a variety of different ones that can help get that information into the system so we can do the three-way match.
Is there a built-in workflow for approval of non-PO invoices?
Yep, excellent question. And of course, yes, there is. The workflow is then it's multi-level. You can actually have rules. If it's over a certain dollar amount, it needs to trigger this person for approval. Yes, there's a very robust workflow tool within the system for non-POs.
Okay. Here's a question. For slow-paying customers, is it an effective approach to apply finance charges? And if so, how do you balance a standard automated solution with trying to also maintain a strong customer relationship?
Yeah, so that's again, that's a little bit more on the AR side if we're talking with our customers. But yes, slow-paying customers, that is a challenge. You know, again, if you have the visibility, you can see with them and hopefully work with them. And you know, in our accounts receivable application module, if you recall back to the first one, we actually have a rating system for your customers that do pay you slowly. So what happens then is you can start a different collection strategy. Maybe you need to send them a reminder letter more frequently. Maybe you can look at that and say, boy, they are paying us pretty slow. Maybe you do need to think about increasing the price for them or charging a late fee or surcharge for that. Again, I don't know exactly the best strategy that's right for you or your customers, but with the ESKER solution, you have the visibility to see that, track that, and then kind of launch any strategy that you think would work well.
I guess the implication there is that ESKER also allows you to calculate finance charges or to apply finance charges based on some rate, number of days, so on and so forth.
Yes, you could do that stuff in the system. Yes.
Okay. Is ESKER better suited for service companies or those with heavy inventory?
We've seen both. Our accounts payable. Excuse me, our accounts payable is it's a wide variety. We've seen everything from services like hotels, law firms. We've seen a lot of manufacturing, tons of manufacturing, medical device, pharmaceutical. I would say it's our customer base is very wide when it comes to accounts payable. There's really some verticals we tend to do a little bit better at, but I don't know if it's anything that specific. I just think it's maybe where we spend a little more time focusing and marketing, but our customer base is all over the place. We recently just signed up an NFL team, so I don't think that's a vertical market we're going after, but it's an interesting one.
Okay. Here's a question about reporting. Does ESKER provide reporting on purchases by vendor or other standard purchase reports, 1099s, and so on and so forth?
Yes, so as the purchasing module, we do have some of those, but yes, with the accounts payable, you can report by your vendor for you have all that information. And everything that flows through the ESKER system, you can track and report on.
Okay, here's a question. I think it's a clarification question. You talked about cost to process a single invoice of $2, single invoice for $2 for best in class and for $12.60 for low automation. Then you mentioned the time to process invoices. Is the time to process not already factored into the cost to process?
That's a good question. I would have to look at so that was the Ardent Partners that did that. I would imagine, though, that cost would have to be brought into that time. I would imagine. I would have to look at the study itself, but I would think it would have to be.
Yeah, I would only add, I've seen reports like this before, and I think the real key issue here is sort of what I'll call when the clock starts and when it stops. And if you've got POs, for example, POs are often done in purchasing, which is not accounts payable, and then payments sometimes are done in another area. So, how many areas, when does a clock stop and start? I mean, this is like when you go to a restaurant, the time it takes to order the meal and time to eat the meal, but by the time you get out of the restaurant, it could be, a couple of hours. So what are you exactly measuring? And it is difficult sometimes to tell with some of these studies, but if I were looking at this, I would make sure that it would include not only the time to process, which is AP, but maybe the time to approve and even the time to release the payment.
Yep, and yes, the approval oftentimes is not, though, because a lot of times this focus is just on the AP department, but it may sit on a manager's desk for weeks before they get to it. So oftentimes that can be kind of a interesting factor to put in there.
Right, I think so. I think the point to remember there, whether it's $2 or $12.60, I'm almost sure that the total cost to drive it off the lot, so to speak, is going to be way higher than any of those numbers.
I would probably agree with that. Yes. Yeah. And
this is why payments are something that you want to do as efficiently as possible.
Yep.
Does ESKER perform vendor spend by vendor so you can negotiate better rates?
Yes. So you can see what your spend is by vendor and then use that information however you like. Yes. But we do not do, though, we're not a buying conglomerate, though, so we don't that it's not a group. It's all the information is we give to you, and then what you guys do with it, that's kind of up to you. So we're not a AP buying group, if you will, and there are some companies that do that, but again, that's not our model.
Does ESKER provide space or some sort of feature where you can store contracts and look at whether the payment is in accordance with some contract, let's say when you're billing on a percentage of completion basis?
Yep, we do have a contract management module as well that you can have there, and that would be tied, then you can see those information when the invoices come in. Correct.
Okay, I think we're reaching that magic 1 hour mark here. Got a couple of minutes left, so last call for questions. I think we've got some very good questions here. And again, if you really do want to get into the deep details that are specific to your company, obviously you can take that offline with Brian. But so last call for questions. And yes, a copy of the slides. Yes, you will. And oh, here's another question. So anyway, so yes, copies of the slides will be made available in about 48 hours. How about constructing supplier hierarchy? Can ESKER do that?
Supplier hierarchy is just like to I guess I would say, what would be the purpose for that? What would be the goal with that? Is to I don't want to necessarily speculate, but does it say any more on that? Because that may be something we have to take offline.
Yeah, I don't think so. Let me guess here, and I think the person who put that question together maybe want to take it up with you privately. I suspect what they're saying is that when you are paying subsidiaries of a parent company, it's often good when you're negotiating discounts to say, hey, I paid you, whatever, $1 million through your 10 subsidiaries, even though I paid each of them only $100,000.
Oh, sure.
So I'm paying you $1 million. So where's my discount?
Oh, yes, yes. That you can easily track. Yes. Mm-hmm.
Yeah. And here's the follow-up is to roll up suppliers to understand the total supplier exposure.
Yep, absolutely. Yes, you can track that in. Yes. Mm-hmm.
Yeah, I can see that for construction or something that could be important, depending on the contractor subcontractor relationships.
Yes, definitely. Yeah.
That's That's interesting because some ERP systems do have a trouble with that. So again, this gets back to maybe the heart of ESKER, which is really a relationship system as much as it is an accounting system.
Yes, I think you hit the nail on the head there, Bruce. I would agree.
Okay, and there we go. And we've sort of run out of time. Again, more questions, please send them to Brian. You have his contact information, and failing that, you can always send it to me, and I will make sure Brian gets it. So with that, I would like to thank Brian, obviously, for all the work he's put into this presentation. Thank you to the audience for some really good questions. And I suspect we have not heard the last of supply chain questions this year. just a guess on my part. So,
I would agree.
All right, with that, I'm going to end the presentation. Thank you all, and we'll talk next time.
Thank you very much.
Bye-bye.